Okay, things are switching on slowly but surely. LinkedIn, YouTube. I'm just waiting for YouTube to go live. All right. Okay. All right, so I'll just let everybody in and disable the waiting room. Okay, somebody else to get in. Okay. All right. Some people still trickling in, but good evening, good afternoon, good morning, depending. Okay, decline and don't ask again. Sorry, no transcription. The person who requested the transcription service, sorry. Okay, thank you for joining us, HTJ.tax. We do these live streams every week, different tax topic of interest. And today we're going to talk about US-Portugal tax. For those who are joining us for the first time, please remember that this is not advice. We're having a general conversation with general principles. If it is one of the topics that we discussed that you want to take a deeper dive into it, you would need to engage a professional of your choice to work with you on it and to get specific advice. And you can engage us, or you can engage whoever you feel comfortable with. But this is not advice. Treat it as educational or entertainment, depending on your perspective. This is being recorded. So for those on Zoom, we also live streaming it onto Facebook, LinkedIn, YouTube, whatever. And for those who are on Zoom, if you do not want your image to appear, just keep your camera switched off. Otherwise, you will be recorded. So the recording will be available on YouTube, SoundCloud, iTunes, Spotify, wherever you get your favorite podcasts. We put it on somewhere between 15 to 20 podcast platforms, including our website, HTJ.tax. So without further ado, I introduce you to Augusto Polino, who's going to give a presentation on Portugal, and then we will just jump into the Q&A. I got your questions. There have been a lot of questions submitted, over 20 questions submitted. And some questions are like part A, B, C, D, E. So it's a lot of questions. Unfortunately, I apologize in advance. We will not be able to get through all of them, but we'll do as much as we can. For those who have not had a chance to submit your questions or topics, please type them in the box below and we'll get to them in the order in which they're received. Over to you, Augusto.
Okay, thank you, Darren. Thank you for the introduction. Hello, everyone. Thanks for joining this webinar. Just a brief presentation of myself. So I am a tax consultant in Portugal for almost 20 years, and we have assisted a number of private clients that decided to move to Portugal, including US citizens. The idea of this webinar is try to summarize some of the most common questions that arise from a tax perspective, and focused on the NHR regime, the non-habitual residence regime, which is a tax regime, a favorable tax regime that could apply in case of individuals that decide to move to Portugal. I have a brief presentation to talk about the main features of this regime. I will ask Darren the permission to share my screen. Just a moment. So please confirm that you are seeing my Okay, my presentation. So the idea would be just in brief to talk about the regime, the tax regime in Portugal, and as I mentioned, the main features of the non-habitual resident tax regime. So, as an initial remark, just to clarify that the NHR is a tax regime that is applicable regardless the type of visa or residence permit that an individual can obtain to live in Portugal. So this is just a tax regime, and it works in parallel with any immigration and visa procedures. So sometimes things are a little bit mixed between golden visa, other types of visa, and tax regime. So we are only talking about a tax regime. And this tax regime is applicable to individuals that move to Portugal and are considered tax residents in Portugal according to the local, the Portuguese law. And the other condition to apply for this regime is that the person has not been tax resident in Portugal in the previous 5 years. So these are the main conditions for the regime. And the idea is, in terms of procedure, that the application is made until the end of March of the year following the one that individual move and change the residency to Portugal. The regime is applicable for 10 years, counting from the first year of tax residency. Some questions that are common with respect to this 10-year period is what about after the 10 years period elapsed? So in such case, the non-habitual residents became ordinary standard taxpayers in Portugal according to the general rules. And what happened if during this period, for some reason, the person decides to leave Portugal for 1 or 2 years? In such case, the regime will remain applicable if for any reason the person returns to Portugal, as long as it is within this 10-year period, counting from the first registration. So, and also another common question is if there is an option to renew the regime after the 10 years. It's not an option. So it ends and you became a regular taxpayer. So about the conditions to be considered tax resident in Portugal. So the rules say that you became tax resident in Portugal if you spend more than 183 days during any 12-month period. So this is the first criteria, the general criteria. And then even if you do not spend 183 days, you can be considered as tax resident if you have a dwelling in Portugal in conditions that suggest an intention to keep it as habitual residence. And also an important aspect with respect to the tax residency in Portugal, that is, Portugal has the concept of partial residency, meaning that, for example, in the first year, you can be considered tax resident only from the date that you register in Portugal until the end of the year, and not the whole tax period, which in Portugal is the same as the calendar year, running from January to December. And I believe, of course, with respect to the tax residency, there are a lot of questions that can be addressed, namely in respect when we are discussing the tax residency between two jurisdictions that should always be evaluated under the double tax treaty concluded by Portugal and the other jurisdiction. In case of the US, it's a very specific case because, as you know, being a US citizen or holding a green card, you will always be considered as taxable in the US as well. Well, that's the rule. I think we can move just in terms of trying to summarize the process in Portugal for tax purposes. So the main steps are apply for the Portuguese tax number, register as tax resident, apply for the NHR status, and of course on an annual basis to file the Portuguese personal income tax return. As a non-habitual resident taxpayer, similar to any other taxpayer in Portugal, you need to report the worldwide income, even if for any reason such income could be exempt under the NHR rules, but you always need to report the worldwide income. In terms of the annual tax return, as I mentioned, in Portugal, a tax period is the calendar year from January to December. And apart from reporting all income obtained worldwide, you also need to report foreign bank accounts. So there is no requirement to report assets or balances of the financial accounts, but you need to report the number of the accounts held abroad. So trying to address some of the main features of this regime and some of the benefits that the NHR regime grants. In terms of passive income from foreign source, such income could be exempt from personal income tax in Portugal in certain conditions, if certain requirements are met. So the one message that it is important to give is that not all income from foreign sources is exempt under the NHR regime. So sometimes people think that this is a full exemption of taxation. It's not the case. We need to evaluate the nature and the source of the income to confirm if it is exempt or not. In case of passive income, for example, if we are talking about dividends, interest, rental income, that could be taxable at source in the other country according to the double tax treaties. In principle, this means that these types of income are exempt from taxation in Portugal under the NHR regime. But to give a different example, in case of capital gains derived from the sale of securities, shares, bonds, whatever, capital gains are or can be subject to taxation in Portugal. For example, in case of capital gains derived from the sale of shares in US companies. So such capital gains would be taxable in Portugal, and even under the NHR regime. think that this is the main message, is that not fully exempt income from foreign source. And with respect to employment income and self-employment income, also from foreign source, exemption is also available, but depending on the situation. For example, employment income, it's only exempt from taxation in Portugal if actually subject to taxation at source. With respect to self-employment income, if derived from what we call the high value-added activities, the exemption may apply, but in such case, the rule is that such income could be subject to taxation at source, again, according to the rules of the double tax treaty. And with respect to the high value added activities, there is a specific list that I will share in the end of this brief presentation. But the idea about these high value added activities is that it foresees several professional activities, and this list was amended in 2000 with effects from 2020 onwards. I would say that it broadens the opportunities for professionals to benefit from the regime, but it's always required to evaluate, depending on the nature of the activity, if it could be applicable and considered as a high value added activity for the purpose of the NHR regime. Another important aspect of the NHR regime has to do with the taxation of pension income from foreign source. So the regime originally foresees full exemption from taxation of pension income. This the regime was changed in 2020, March 2020, and now it foresees a taxation at a flat rate of 10%. But this new rule, it's only applicable to individuals that register as tax residents in Portugal after March 2020. Meaning that the changes introduced in the law were in a way that protect the regime for previously registered taxpayers. And just one final comment with respect to the benefits applicable to both salaries and employment income and self-employment income derived from activities performed in Portugal and income sourced in Portugal. A flat rate of 20% may apply in case of high value added activities again. And this flat rate of 20% compares with the progressive tax rates applicable to general taxpayers up to 48%. So it's a great benefit in terms of personal income tax. Just one additional comment with respect to activities performed mainly in Portugal that has to do with social security contributions in Portugal. And the NHR regime, it's a regime that only foresees benefits for personal income tax purposes. So if employment income or self-employment income is subject to social security contributions in Portugal, the NHR will be treated as any other resident in Portugal, and social security contributions will be due on the work performed in Portugal. And now, just I will not enter into much detail on the list of high value added activities. So it is this new list is based on the Portuguese classification of professions in order to be more objective in terms of the evaluation if a certain activity qualifies or not as a high value added one. And just trying to summarize leave some takeaways. So in general terms, in brief terms, Portuguese non-habitual resident regime is a favorable tax regime that allows to accrue wealth in a whitelisted tax environment. It also allows the disposal of assets benefiting from tax exemptions. It may also allow to pass on wealth or estate without inheritance or gift taxes. And finally, it allows to enjoy the retirement with a minimum tax leakage now of 10%, which is still a very attractive regime. And as I mentioned, is applicable for 10 years. So I believe these are the main ideas that we want to share with you. And now maybe we can move on to the questions, and maybe some of the questions were already answered during the presentation, hopefully.
Wonderful. Thank you very much, Augusto, for that really comprehensive overview. So now we're going to jump into the questions. Again, for those who've just joined, if you did not get a chance to submit your questions previously, just type them in the box below and we get to them in the order in which they are received. Disclaimer, as you saw on the bottom of each of Augusto's slides, this is not intended to be advice. We're having a general conversation about general principles. Let's jump into question number one. I am interested in learning about the NHR. Hopefully you've learned a lot. I moved to Portugal in August 2021, so August last year. I'm retired and I have not worked since May, June 2021. Do I qualify for NHR? And would that be of value to me? So I guess this person may be wondering about a late registration for NHR. Augusto?
Well, if the person moved in 2021, it's still on time to file the request for the NHR until March. So we have 2 months. Okay. And in terms of benefits, yes, I imagine that if as foresee receiving pension income, for example, it could be it could have benefits with the NHR regime.
Okay, wonderful. And just to be clear, so if this person, him or her, applies now and gets approved, would it be retroactive to last year though? Or would it be just for 2022 for when they file the returns in 2023?
Okay, so the NHR regime, once approved, is applicable since the first day that the individual was considered tax resident in Portugal.
All right, so fantastic. So it goes all the way back to August 2021. Fantastic. Yes. Thank you very much.
As long as the regime, the status is obtained until the end of March 2022. Okay.
Perfect. And so for whoever asked that question, you can feel free to reach out to Augusto to take that forward. Question number 2. I have questions regarding the taxation of US persons when they're investing in a Portuguese fund for the golden visa. So someone is a golden visa investor from the US. What kind of taxes do they need to take into account, and what are the rates? In most cases, they would not be residents and they won't be tax resident in Portugal. What's the best way to declare income from these funds, both dividends and cap gains? It'd be great if you can talk about PFIX. Okay. So one of the upsides with the golden visa is that you get to enjoy Portugal, but there's no minimum stay requirement. You can still live in the US or wherever in the world that you would like, subject to the rules of the golden visa regime. But this is not a talk about immigration, right? So from a tax perspective, if it is you don't trigger one of the two indices that Augusto indicated in his presentation, so you're not going to be here for 183 days or more, and you don't have like your center of life here, then you're correct in your assertion that you won't be subject to Portugal tax. But you're still American, right? So you're still a US person. So as always, you're subject to tax on your worldwide income. Now, you're asking specifically about the golden visa fund. So there's a number of ways of getting the golden visa. One of them is investing in certain funds. Now, as you indicated or you suggested, you're right. Some of them are given a special treatment under the US tax rules called PFIC. PFIC stands for Passive Foreign Investment Company. What does that mean? Well, there are a number of rules in the US tax code meant to address investors who invest outside of the US. So it was a big deal once upon a time for Americans to invest outside of the US and take advantage of the fact that they don't need to pay taxes until there's a liquidity event at the end of whatever the lifetime of their investment is, which is unfair, right? Because if you invest in US CITES funds, you get a 1099 every year, and you need to pay taxes on whatever the dividends earned, even though they may be reinvested. You still need to declare and pay taxes. So the domestic financial institutions within the US, they complain to Congress and saying, hey, foreign financial institutions have an advantage on us. So in 1980s, under President Reagan, the PFIC rules were created. So I won't get into the details of it. Suffice it to say that they can be quite aggressive if you have a foreign investment, for example, one of the golden visa investment funds, and they're not properly declared. And so you need to, first of all, make sure that your tax team is familiar with international issues. And this is something we do. We are the advisor's advisor. So we often do speak to US tax teams that are very domestic focused, and they don't understand the international rules. So there are a number of ways of treating the fund if indeed it is a PFIC. So basically a PFIC is any foreign mutual fund. Just, I'm being very, very general. But if you have a foreign mutual fund, more or less, chances are you need to check to see whether it's a PFIC. There are a number of ways of treating it under section 1291, 1293, and 1296, I think, of the tax code. What you're looking for, some of the funds, the golden visa funds in Portugal, they are designed for Americans. So what they do is they make an election called a QEF election for a qualified electing fund, and they will give you a statement every year. So that's what you're looking for. The ideal is to find a qualifying elective fund. Now, if you don't have that ability to work with a fund that is a QEF and that will give you a US tax statement every year, then you will need to let your tax advisors know, because then the tax advisor that you have will need to create a QEF statement every year, and they'll need to work with the fund to get the data to make it US tax ready. So the bottom line is that it's not a showstopper. I've seen some stuff written online, and it could be a little bit doom and gloom and fear mongering. Don't worry, once your tax advisor knows what to do, they'll be able to work with you and work with the fund to prepare the relevant statements to make sure that they're properly disclosed on the US tax forms, which is the form 8621, and the relevant calculations done. If the right calculations aren't done, then the PFIC becomes what we call tainted, and some really aggressive throwback rules are invoked. So and they are meant to be very punitive. So you want to completely avoid that. So hope that answers your question. If you're considering the golden visa, do not run away because it may be a PFIC. Just speak to your advisor and make sure that you're prepared to deal with the US tax consequences. Hope that helps. All right.
Darren, just for completeness and with respect to the Portuguese perspective, so in case of income derived from such funds, it depends on, of course, of the nature of the fund, but if it is not related with real estate in Portugal, in principle, what happens is that any income earned by non-resident participants will be exempt from taxation in Portugal. Just for completeness.
Fantastic, thank you. All right, so I'm seeing the questions coming in. Please continue to put them in the boxes below. We are seeing them, but we'll get to them in the order in which we do receive them. So, right, question 3. Please describe the tax liabilities in Portugal and money removed. I guess, okay, when you mean removed, I guess you're talking about IRA distributions. So US IRAs distributions, are they considered pensions from a Portugal perspective? I know you touched on this, Augusto.
Yes, well, we need to evaluate the nature of the income. I understand that also from an US perspective in terms of qualification of the income. And for example, double tax treaties would be treated as a pension income. Yes, that's correct.
Right. So as a result, so what you're asking is, the answer is going to be yes, it will be taxed, assuming that you are a tax resident in Portugal. It will be taxed by Portugal. Yeah. If it is, as you would have seen in Augusto's presentation, the NHR would allow a preferential tax rate of 10%, but it is going to be taxed. You don't need to worry about double tax once your tax team knows what they're doing. The reason why is that the US side of your tax team will be able to invoke the double tax agreement between Portugal and the US to ensure that the taxes that you pay in Portugal offset any liability you would have in the United States for the IRS. So hope that answers your question. Next, number 4, the rules for pension income have changed recently. Can you explain the changes? I guess they're talking about 2020. Augusto?
Yes, so the change with respect to the pension income was that originally the NHR regime foresees that pension income from foreign source was fully exempt. So and now a flat rate of 10% is applicable.
Correct. So just for those who were interested in a little politics behind that, some other European countries complained a bit about Portugal, and it's not just picking on Portugal because it's happened. They've complained about other European countries as well. For example, when Britain was part of the EU, they complained about the res non dom regime in the UK. So it happens.
There are similar regimes right now in Spain, in Italy, in Greece. So it's but with respect to that, even this week we get the formal information from the Swedish tax authorities that cancel the application of the double tax treaty with Portugal. One of the reasons is the NHR regime. We have already this discussion with Norway, I believe. So there's some politics involved.
It's quite political, but 10% isn't bad. And from a US point of view, assuming depending on your situation, it's not, well, depending on your situation, because the NHR is quite nuanced. it may not materially impact your tax return, but speak with your advisor about your specific situation. And question 5, as an expat, a US expat here in Portugal, what forms will I need to fill to do my Portugal taxes? That's a big one, Augusto.
Well, it depends on the nature of the income. So one thing is for sure that if you have any income worldwide, you need to file the personal income tax return in Portugal that is due between April and June of the year following the one that the income relates to. And then to see the information and the specific appendix of the tax return that needs to be filed, it depends on the nature of the income that you receive in a certain year.
Yeah,
what we can do is that if there is no other specific activity developed in Portugal that gives rise to other tax obligations, namely with respect to VAT, social security contributions, and so on, for personal income tax return, the only tax obligation, the only tax filing obligation is the personal income tax return once a year.
Right. So, if it is whoever asked this question, if you're new to Portugal, I know you're filled with the spirit of adventure, but it may be worth getting professional guidance if, depending on your situation, because it's best to start off on the right foot in Portugal, and you don't want to get on the wrong side of the tax authority if you were to make a mistake by trying to self-file. So, err on the side of caution, be prudent, get professional advice. Okay. Next question. Is it better to file Portugal taxes before the US? We had this discussion, and we had this question asked previously, because as you know, as Augusto just mentioned, the Portugal taxes are due between April and June. And Portugal also has a calendar year, Jan to December, just like the US. So for the US, payments are due by mid-April. But because we're outside, we get an automatic 2-month extension to submit the physical return, which takes us to mid-June. So normally the busy period would be between April and June. Augusto, what are your thoughts?
Well, from our experience with the US clients, Darren, the idea would be to try to file the Portuguese tax return first, because in case of income that is subject to taxation in Portugal, you can claim the tax credits in the US, and the best approach would be to first confirm if there is tax due in Portugal or not, and then file the tax return in the US and claim tax credits if it is the case.
100% agree. That's how we work together. What we do actually is we set up the return. We set up the US side of the return, because from the information provided, we can do every single form on the US side, aside from the 1116s, which are the foreign forms. So then we sit and we wait for Augusto to finish the Portugal side, and then we plug those in, and then you're good to go. So chances are both are ready at the same time, but Portugal has to finish that calculation first, because that's a calculation we carry over onto the US 1116s. And we may need to invoke the double tax treaty just to make sure that they get applied. Hope that helps. Just remember that from a US side, you may get an extension if you file a 4868. You may get an extension of time to file, not time to pay, for those who are new expats. This may be your first time living outside of the US during the tax cycle. You still need to make that mid-April deadline. So please start speaking to your tax teams. Moving on. Number 7. What does the NHR do to our taxes? I think Augusto answered that in detail. It is pretty nuanced, though. It's not like, Spain with the Beckham law, or res non-dom in Ireland or the UK, or the flat tax in Switzerland. It is very, very nuanced. Don't you agree, Augusto?
Yes, We always need to look at the nature of the income that we are talking about and also the source of the income.
Yeah. Right. Moving on. What happens? Okay. Question 8. What happens to our taxes if we get a 1099 from the US? So person whoever asked this knows what a 1099 does to US return. So a 1099 would be for someone who is self-employed, an independent contractor. So if someone is sitting in Portugal as an independent contractor, earning money from US clients, what does that do to their Portugal returns, Augusto? But I know you covered it in your presentation, but yeah, summarize.
Well, if the activity is mainly performed physically in Portugal, even if the clients, the customers are, or the clients in this case are in US, such activity would be subject to taxation in Portugal as self-employment income. Then we need to evaluate if it qualifies as a high value-added activity in order to benefit from the 20% flat rate, or if it is an other activity, and in such case, the progressive tax rates up to 48% will apply. One important aspect that I mentioned also in the presentation has to do with the social security contributions, because if the person is physically in Portugal and performs all his activity and professional activity here, in theory at least, it is subject to social security contributions in Portugal as well.
Yeah, and I think that's a really important point. Yeah, that people, I get so much, people's jaws just fall to the floor. It's like, what? Are you serious? I have to pay so much? Because what it could do, if it is that you are high value added, so that's 20%, but then this puts an extra, what, 21% on top of that?
Yeah, it depends if it is a self-employer, in this case. Yes, it's 21.4.
Exactly. So, which is pretty steep, but but it's not. But then this is not a Portugal issue. This is Europe. So social charges apply wherever you go. So for those who are new, just something you need to factor in your planning. Number 9 is a big one. So this is one of the big ones I warned you about. So I'm going to read it in full. Hello, I do have a question. I'm a US citizen. I'm still in the US, but I'm considering applying for the D7 visa. The D7 application process requires applicants to sign an apartment lease in Portugal prior to applying for the D7 and prior to flying to Portugal. If I'm still living in the US, does signing this lease for an apartment in Portugal immediately trigger tax residence in Portugal? Or is Portugal tax residency not triggered until I land and I set foot on Portugal soil? Augusto.
Okay, so the fact that you sign a rental agreement does not immediately trigger the tax residency. So the first day that you get to Portugal could be the first day of tax residency, if it is your intention to stay here as this house that you rented with the intention to be your main house.
Okay, all right. So this is one of those questions. Parts.
You just for completeness, usually this is the common process. So first you need to have a rental agreement or even buy a property in Portugal, and then apply for the visa and follow all the steps that are required for immigration purposes to have the residency permit and so on. And only after those steps are completed, you can be registered as tax resident.
Okay, all right. And the person has like parts A, B, C, D to this question. So the context is, I have some mutual funds that have some gains, so they appreciate it. And I'd like to sell them to reset the basis after the D7 is approved, but before I fly to Portugal. So, okay, so I think Augusto has answered that part. Your residence won't be triggered until you land in Portugal with the intention to reside here. So moving on to the other parts of your very long question, but we got you. It's okay. We'll go through them. Remote from the US. Okay, right. He's talking about the sequence of his events. He is in the US. He's going to get his NIF, open a Portugal bank account, sign the lease, applied for the D7, wait for the approval, and then after approval, but before flying to Portugal, sell the mutual funds, deal with the US capital gains, and then move to Portugal, then land in Portugal, move into his apartment, and apply for the NHR's status effective the date of my relocation, but not before. Okay. All right. So I think Augusto's answered your question. If not, please just type below, but I think your question has been answered. Thanks for asking that. That's a really good question. Next one, number 10. Would our US Social Security be taxed in Portugal? Augusto, Social Security payments from the US government.
Under the double tax treaty, in principle, no. Social security payments will be subject to taxation, if any, in the US.
Okay, fantastic. Well, finally, we have a question with just a simple answer, which is very rare.
Okay. Well, it's simple.
All right. Okay. 11. Will okay, IRA distributions be taxed in Portugal? We answered that previously, and someone else asked that question. Number 12. Does Portugal tax inheritance? Okay, so does Portugal, would Portugal tax the inheritance money that our son would receive when we pass away? So Americans living here, tax resident here, they want to know if Portugal will tax the inheritance that they plan to pass on to their son who does not live here. Augusto? You're on mute. Okay.
Sorry, I was saying that inheritance taxes have always some nuances as well. But if we are talking about inheritance from parents to sons, the inheritance tax in Portugal as an exemption, so it's not applicable.
Okay, but okay, and I guess as they're asking about cash, that would apply. But what about? I'm just thinking aloud. What about if it were real estate?
Well, in terms of taxation of inheritance, we have an exemption from parents to direct parents.
Direct descendants. So what about?
But if we are discussing inheritance in terms of assets that are not located in Portugal, for example, a tax resident in Portugal, but we are talking about assets that are not located in Portugal, those assets are not subject to inheritance tax under the location rules of the taxes in Portugal.
Okay, gotcha. But if it were Portugal's citus assets, would it be subject to any sort of transfer taxes or stamp duty or?
No, stamp duty will not apply between parents and sons.
And kids, okay. I hope that answers the question.
If it is a gift to other or inheritance or to others than not direct parents, it could be between parents and sons. It is subject to taxation. Yes.
Okay. I hope that answers your question. I'm going to switch from one list of questions to another. So just to give everybody a shot. First question on my other screen. Does applying for the NIF automatically register? NIF will be the Portugal tax ID, for those who are not familiar with it. Automatically register someone as tax resident, or is there a separate process after obtaining the NIF? Augusto, you clarified that it would be upon arriving in Portugal with the intention of residing here, correct?
Yes,
Yeah.
yes. So in terms of process, it usually the tax identification number is requested as a non-resident. For example, for filing for the purpose of signing a rental agreement, you should have a tax identification number in Portugal. But when you obtain initially this tax identification number is as a non-resident. Then only when you move to Portugal, you change your tax residency. So the tax identification number is no longer as a non-resident, but as a tax resident.
Okay. Hope that clarifies. Next question in this other list is, it's about inheritance again. Someone is asking about inheritance not being taxed at the NHR, but it's inheritance is it's a big field though. But I think you've hit on the key points. If it's not Portugal situs, no. If it's Portugal situs and it's to a direct descendant, for example, your kids, no. But if it's to someone else, potentially yes. Augusto?
Yeah, that's it. That's the idea.
Okay. So next question, Veronique. If I updated my NIF with my Portuguese address in January 2022, so I guess you arrived last month because we're in February now. This is being recorded in February. So you would have arrived in January 2022. Do I have until the end of March 2022 to apply for the NHR, or the end of March 2023 to apply for the NHR?
March 2023 in such case,
Okay.
because the year of registration was 2022. Then you have until the end of March of the following year. Of course, you can obtain the status and apply for it right away.
Okay, I hope that answers your question. If not, you can just type another one below. Next question from John. Would you still have to pay US taxes if you were in the NHR when your US parent pass? Okay, so I'm assuming that your parents are, well, your parents are based in the US and you are based in Portugal. Now, under US estate tax rules, taxes are potentially levied on the estate, not on the person receiving the taxes. So the US doesn't necessarily have an inheritance tax, like for example, in the UK, where the person receiving an asset is subject to tax. But it's the person who has passed on, their estate is liable to tax. I know there's certain states, that's at the federal level. I know there's certain states that may have a version of an inheritance tax, but generally speaking, at the federal level and most of the US states, the estate tax is levied on the estate of the person who passed. So if your parents are in the US and you're here in Portugal and, you know, unfortunately they passed on, then their estate would still be responsible for any estate tax issues. I hope that helps. Someone is just commenting there's no inheritance tax in Portugal, regardless. Okay. Thank you, Manuela. Moving down. Is US rental property income not taxed in general or just under the NHR? Augusto, US rental income. You're on mute, Augusto.
Sorry again. So with respect to rental income from foreign source, in this case, income from real estate in US, this is not subject to taxation in Portugal. It is exempt under the NHR regime.
Right. So, I hope that answers your question. Go ahead.
The general standard taxpayer in Portugal, exemption will not apply. So this type of income would be subject to taxation.
Right. So I hope that answers your question about the NHR versus no NHR when it comes to US rental income. So if it is that you have a rental portfolio in the US investment properties in the US, then you should consider the NHR. Get advice, because I don't know what your overall situation would be, your other assets, but it's something to consider. So hope that helps. Next question, Victor. And this tax applies to US government pensions as well. Yes, pensions, US government pensions, Augusto. I think you touched on this already.
Well, if we are talking about public pensions, so pensions received from work performed to the government or other entities, I believe that under the double tax treaty concluded between Portugal and the US, have exclusive right of taxation, and therefore I believe that in such case are not subject to taxation in Portugal. In case of pensions derived from work performed to the government.
Okay, all right. Hope that answers your question, Victor. Jeffrey, to clarify, would I pay tax in Portugal and use the foreign tax credit in the US, or pay tax in the US and not pay any taxes in Portugal? Jeffrey, sorry, I'm not sure what type of income we're talking about, but if it is pension income, which is what a lot of people ask about, if it is that you're receiving, like you have a 401k, you have an IRA, and there's going to be a distribution from it, they'll be subject to, as Augusto said, that 10% in Portugal. And we'd have to reclassify the income. It's a bit of some tax alchemy that international tax professionals who are familiar with the situation would know how to do. So there's a bit of alchemy involved. So that income, even though it's US source, will be reclassified as foreign source. So that way we can apply we can use the tax credits for the taxes already paid to Portugal against any US liability. So the bottom line is, just stepping back and looking at the big picture, is that you're not going to be paying tax twice. You'll only be taxed one time on that income. You're not going to be double taxed once your team knows what they're doing. I hope that helps. All right, next one, John. I obtained says NHS, but I guess he means NHR. I obtained the NHR in 2020, but filed my application before March 2021. Will my rate be the 10% or the zero rate? Right, because, yeah, right. It changed, right? So you obtained the NHR at the beginning of 2020, presumably that's before the 10% regime kicked in. Sorry, I'm getting more messages. But what do you mean by filed your application before March 2021? But anyway, in a situation like that where he got the NHR at the beginning of 2020, would he enjoy the former rules where his pension income would be free of that 10% tax, Augusto?
Well, the relevant date is the date of tax registration here in Portugal. So if the date of registration in Portugal was before March 2020, the previous regime applies.
Okay, gotcha. So before March 2020, if you registered if you were tax resident in Portugal before March 2020. You're good. Afterwards, you're in with the rest of us. Okay?
Yes.
Hope that helps. Next question. Okay, Bruce. Okay. Since it's possible to sell mutual funds. Okay, fine. Oh, okay. So Lisa's asking, are stepkids considered kids when it comes to that inheritance tax in Portugal, which I guess would really be the stamp duty, the transfer taxes? Augusto?
I think so. I'm not an expert in terms
Okay.
of inheritance
Yeah.
rules, but I would say yes.
Mhm. Yeah, when it comes to inheritance rules, even with U.S. tax and estate taxes, as transfer and estate taxes, that's a whole other discipline. It's in U.S. taxes is actually the area of practice with the highest amount of litigation. So for us, because we have professional liability insurance, right? So we have the greatest chance of being sued if we do estate tax work, because it is very, very contentious. I'll just leave it there. Moving on, John. Okay. All right. So yeah, John, I got your question before. Okay, but so I'm getting it on two screens. Okay, but I'll deal with it here. I'm a U.S. citizen with UK employment. If my company relocates me to work from Portugal, would my income tax be lower or higher than the US if I earn more than 100K euros? At what income tax bracket would I be liable for paying dual tax to the US? And are there any other taxes I'll have to pay as an employee in Portugal, such as Social Security, healthcare, surcharge, capital gains tax, crypto tax, etc.? And 3, if I'm a spouse on a D7 visa, I'm allowed to work for a foreign company, US or UK, as an employee and independent contractor. If so, would my tax be less than? Okay, this is a lot, and I appreciate you providing a lot of details, but I think this may be a little bit beyond the scope of what we're trying to do here. But generally speaking, so when you say if your company moves you to relocate, are you in Portugal now? So if it is that you are not in Portugal and you're in the UK because you're a US citizen with UK employment, I'm assuming that UK employment is being exercised in the UK. Now, if it is you decide to come to work in Portugal, would your income tax be higher or lower? We need to run a calculation, because the 3 jurisdictions in play, the US, the UK, and potentially Portugal, it's not just about the headline tax rate. There are also deductions to reduce your taxable income. And various classes of income, of characters of incomes, for example, capital gains versus ordinary income versus investment income. They're taxed in different ways in the different jurisdictions. So someone will need to run a scenario, and we can help you with that if you reach out to me via email, or you just message email. I think I got your other question via email. So email it to me again, and we can perhaps take that further, because a scenario will need to be run where we calculate what the impact of any move would be. So because you have a lot going on, you have a comprehensive portfolio, which is good for you, but I don't think anybody could do it justice in the time that we have here. So I'm sorry, but yes, we can handle this, but we need to handle this separately. Thanks for your patience. Next question, John is asking, distributions from revocable trust considered pension income by the Portuguese tax authorities? I'm specifically interested in investments which have not grown, so this is not a cap gains question, but I'm concerned that Portugal does not recognize a trust structure, which it doesn't. No civil law country recognizes trust. There are some exceptions, but generally no, and could therefore consider this as distribution from pension. So it's revocable, and so Augusto, correct me if I'm wrong, but The tax authority will just see straight through the trust. It does not exist. And whatever the character of the income that you're going to receive, if it is being received from a pension, as you say, it'll just be treated as pension income. And the Portugal tax authority will be blind to the fact that it passes through a trust. Am I correct in saying that, Augusto?
Well, to be honest, I don't know, because it also depends of the position of the person in terms of the trust. So if it was the settler or not, this is something that needs to be evaluated in detail, because the rules may be different if it was the settler or not.
Okay. Gotcha. All right. So that's another one. We need the devil's in the detail with some of this stuff, right? So please, could you reach out to us separately? John, okay, yeah. John, could you just reach out to us separately, and we could perhaps, take a deeper dive into it and give you a considered position and help you with any planning that may or may not be necessary. We have come to the end of our time. I'm really, really, really sorry. I know I'm seeing 10 more questions. I'm really sorry, but it's tax season. That's the way it goes. Please feel free to reach out to us directly on Augusto's. This is being recorded, so if you're playing this recording, you can just rewind to Augusto's slides and you can see his contact details. You can reach out to him directly, or you can reach out to myself via htj.tax. Just go to our website and you can find me there, and we'll be pleased to consider any of your situations from both a planning perspective. So we help you with strategy, tax planning, alchemy, and on the backside, we'll help you with the actual tax filings as well. So please reach out to us. I'm really, really sorry, but we got so many questions, and we're grateful for all of you who have logged in on the various platforms. Again, this is being recorded and will be available on wherever you're going to get your podcast. So you can just check htj.tax. Thank you, and we'll see you next time. Have a good night, day, depending on where you are. Bye-bye.
Thank you. Bye.
Okay, I'm just reading more messages. Okay. You're welcome, guys. Thanks for joining us. See you next time.